So what's going on, guys? Here is another video of my trading strategies. Now, as always, before we start with the video, make sure to like, subscribe, comment. Don't comment, don't like, but make sure to like and comment. So here we go. Today is another episode of my trading strategies. Let's go. So as always, we wanna determine the trend. So we use a couple of indicators. We start always with the EMAs. Now it doesn't really matter which one of those EMAs crossing types you take. If you go to indicators and just write EMA, you will see this one pop up. If you add the cross, you can use this one or this one. It doesn't really matter, it just helps you identify the trend, which is actually what we always want to do. And here we can see we crossed the 200-day EMA, which means we are bearish from here to here at least. So, but what happens after the bearish trend? Here we see the cross between the 20 and 200-day EMA, and here is the 51. And as always, well, not always, but it often happens that we see here some kind of consolidation and move sideways. And usually people don't like to trade this kind of trends. I kind of like them. Of course, it depends how you trade them and what exactly. But then, when we find this consolidation pattern on the daily, we want to look on the 1 hour chart, and we want to look for the highest support and resistance lines, which are somewhere around here. Well, maybe this one could be a little bit higher, or you could mark it as a little bit of a bigger space and use this one here. So it will be something like this. And now we see that the market here is going up and down. So basically, when we hit this resistance area here, we want to short the market. The same goes for here, Here we broke out, but just so you know. And at the same time, we want to buy at the dips and go higher. So basically, we want to stay within this trend or on the 1 hour chart between the resistance and support line. So if we get rid of all those again, and now if we change the chart to the 5-minute chart, let me just add the support and resistance lines once again, because we need those areas here. And now we change the chart to the 5-minute chart, and as always, here we see kinds of retests of the support line, and then we are going higher. So here we were bearish this whole time, and here suddenly we retested the support line here and we went higher, which means we need, or we want to see, this bullish cross between the 50 and 200 EMA. Here we have another one, the 20 EMA, which may be a little bit helpful for the determination of the trend, but not that important. So after we have confirmed that we are now on the bullish trend and we have seen this cross, the chances are likely that we will go to the support line here, to the resistance line here. So what we want to do is So we want to look for the market to come down to the 200 EMA, somewhere around these levels, which should always be a support area or a support line, which is this one here that was previously a support and resistance line. So after that we have now the bullish trend, the confirmation, retesting the 200 EMA, and the one sort of a support line. Now if we add another indicator like the MACD, we can see here that we went below the zero line, or below the 0 point, and we wanna look here for the entry where we see this cross here, which would be one of those candlesticks here, and this is where you want to enter your trade. And the stop loss should be here somewhere around the lowest candlestick that has been formed before, and we always want to target the previous highs. Now here you would have a simple risk reward of 3.2, and as I said, most of the times we go to the next resistance line, which is this one here, so you can determine the trend and see how strong it rallies and maybe take your profits here. But usually if you're a beginner and just starting out, make sure to target the previous highs, this resistance line here, and you could always exit at this point here, or you simply go for 1 to 2 risk reward ratio, which would be even simpler than going for another kind of risk reward ratio. 1 to 2 would be somewhere around here. And after that, now we are coming closer here to this resistance line, and again after a while we suddenly see here cross to the downside, which is where the 50 and 200 EMA cross, somewhere around here. And usually what I always use as well is the RSI to help you determine the trend even better. And if we take a look at our entry here, the RSI was pretty low, and on top of that we have formed here a divergence, which means we went lower on the stock market but went higher on the RSI. So those kind of indicators are the ones that I use the most. Well, most of the times, of course, there are other strategies, but to keep it simple and to make it really basic for you guys, this is the strategy that I use, well, most of the times, to be honest. So here it is. Now the RSI here is the lower point on the RSI, while here is the lower point on the stock market. So you can see this divergence here if we start here, which gives you another indicator that we might suddenly rally. So this is where you want to enter your trade. And well, next time I'm going to show you how I trade this market live. So here you go.